Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're just going to do another velocity banking review with an emphasis on saving money. So I don't know if you ever typed in Google, should I save money? But the top search results seem to be from the biggest financial institutions on the planet, like Discover. In fact, they have an article, top 3 reasons to save money, and they want you to do it today. Why the urgency, Discover? That's really interesting. Do they have a hidden nefarious agenda, or is it for us? And that's very interesting that they want us to do that. And so if we scroll down, the next search results are still about saving money. Top 7 reasons to save your money. Bank of America, simple ways to save money for the future. Now, is this a good idea or should we not save money? That's what we're going to talk about today. And so we're just going to do another example of velocity banking. And this is what I call the financial stress test. So if you make good money and you have a lot of debt, 10 credit cards, and you have 1 penny left over, should I be saving money? Okay. Should I be saving money? I think it's very hard to save money when you only got 1 penny left over. Now, in order to do velocity banking, there's only 2 things that we need. Number one is a budget. So a budget is essentially our debt attack plan. Debt attack plan. Okay. And we have 10 credit cards, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and a mortgage, right? And so our whole goal is to get rid of all of our debt and increase our cash flow. And we're going to do that with the help of line of credit. Now, I'm going to just do this. When we do velocity banking, the only difference between the average American and the velocity banker is what's your main operating account. That's it. It's not about your income. It's about what's your main operating account. And you know what's funny is that people don't even know how banking works. Okay. A lot of people think like, oh, banking takes advantage of poor people. That's actually not true. Banks hate poor people. You know that credit card application where it asks you your income? There's a reason they do that because once they find out you're poor, denied, right? So they're not going to do that. What they want, and we went over this in a previous video about the nurse and TikTok, they want people who make good money, but are kind of just bad at managing it, right? And what's the most important rule when it comes to debt? Banks don't lend money to people who need it. They don't. And a lot of people just don't understand this. That's why I have a ton of credit, but I didn't get myself too much into debt. Okay. So let's go ahead and do the velocity banking portion of this. Okay. So let's go ahead and copy and paste this, all these expenses, because we assume the same income and the same expenses. And we're going to put our big boy pants on, which is not have any savings. Okay. So I'm going to do the exact opposite with velocity banking when based I'm sorry, I'm going to do the exact opposite of what Google is telling me to do and what the big financial institutions are telling me to do with my money, and I'm not going to save money. I'm not going to follow the top 3 reasons to do that. And every time I have a checking account or savings account statement, I'm going to do my best to make sure it stays zero, okay? But we are going to have something called cash flow, and for this demonstration, we're going to make it unrealistic, and we'll say we have access to a free and clear line of credit to make the demonstration easy. Okay. $200,000 of lines of credit. And I know it's what some of you are thinking. This is not realistic. This is not. And I keep telling you all, of course it's not, because most Americans try to get money when they need it. Okay. And I'll just kind of show you here, $280,000 lines of credit, mortgage paid off in 2 years and 9 months. None of what I do is realistic if you're going to base it on what the average person does. In fact, I don't even have any savings. Take a look at this. Money comes in, money goes out, and nothing's saved, right? I'm doing the exact opposite of what Discover is telling me to do. And Discover is saying, because I'm not saving any money, I don't have as much security, and I don't know what they're talking about. I have a ton of security, okay? So let's go ahead and do this. We're going to maximize our cash flow. So once we move some debt into the line of credit, final step is we put our entire paycheck into it and then take our expenses out. So you see this right here, Paycheck comes in, and then as soon as the money comes into the checking account, then it's gonna come out of the of or I'm sorry, it's gonna be transferred or made as an overpayment into the line of credit. Okay, you see how easy that is? Just make sure that this stays 0 and all of my money that comes in goes into a line of credit as long as I have some debt that I gotta pay off. Okay. All right, so let's see what happens. And I know that I've done this demonstration many, many times, but again, I got a comment this morning about how I don't know what I'm talking about because this person thought the average American was about the average income rather than what's your main operating account. And to be honest, I was like, I'm so sorry for you. You're not indoctrinated into my cult. In fact, I'm trying to get some tips from Seinfeld about how to run a cult. George hires a cult to clean his carpets, and then George is angry that he can't join the carpet cleaning cult. And that's what I'm trying to do here. But this is a financial freedom cult, and we have certain beliefs like don't save money. Don't save money. Okay, so let's go ahead and move this $167,000 of credit card debt into the line of credit. And again, I don't know who's able to save money with a penny left over, but let's just go ahead and move this debt. And now we literally went from a penny of savings to $5,345.84. Is your mind blown? My mind's not blown just because I'm kind of used to this now. It's kind of like, with some people, let's say you're learning a foreign language, it's really exciting. It's really like, whoa, I'm learning how to speak words, right? And then to the native speaker, it's like, oh, just a normal everyday life, right? That's just how I am when I'm in this column. Just a normal everyday life. Yeah, just a normal everyday life when I don't have any money in my bank account. Just a normal everyday life when I got $280,000 in lines of credit. Actually, 575 if you include all my other lines of credit. Just a normal everyday life, paying off my mortgage in 2 years and 9 months. Yeah, pretty normal, right? And again, that's actually a good problem. You might think like, oh, this should be always be exciting for me. And one level of mastery is just kind of feeling, I don't want to see bored, but not novelty with whatever you mastered. And that's why a lot of people have a lot of trouble mastering anything new because they always have to feel that novelty. And I don't really need to feel it. Okay. I don't really need to feel it. All right. So let's go ahead and do the final step, which is you dump your entire paycheck into the line of credit and then you take your expenses out. And after every single month, the balance should go down about $5,300 plus some change with the interest of the line of credit. Okay. So let's go ahead and do this and calculate the next month's balance, right? So minus next month's balance is previous month's balance plus the previous month's interest minus the cash flow. So 5345.84. And then we're going to take the interest and calculate the average daily balance. We're going to do that here, multiply it by the interest rate, which is 0.08, and then divide by 12. And then yes, yes. Okay. All right. So now we're going to copy and paste this. And let's go ahead and do that. And by the time we are at month 35, the credit card debt's completely gone. So 35 months, 167K. And we just do this over and over again, over and over again, right? Over and over again. Okay. So do you think I should follow Discover or Bank of America or Bank Rate's advice to save money? Should I do it immediately? Right? Should I follow the top 3 reasons, even though I haven't looked at the top 3 reasons? Why would they want me to save money? Could it be that the banks actually make more money when I just save it instead of attacking the debt as soon as possible? That's very interesting how a company that makes money through debt wants you to save money rather than just attack it completely. And how did I go from a penny to $5,345.84? It's very interesting. Very interesting. Okay. All right. So I guess the last thing we're going to do is just go over the mortgage. So, luckily, we have this loan calculator that can tell us what the balance of the mortgage is. So, let me just go in here and I probably need to delete these lines. And yeah, let's go ahead and delete them. Delete. So, this will be, oh no, what is it? 300,000 at 3%. So, let's just do this 300,000 at 3%, which is 126481 35 months, right? And in 35 months, let's see. Oh, this is from a previous demonstration. In 35 months, how long did it take us to pay off? About 13,000. Actually, is it 13,000? Let me just do quick math. So 300 minus 281. Oh, 19,000. Okay, not bad. Not bad. 19,000. So we pay in 35 months we paid about 19,000. Now, let's move that 19,000 into the line of credit and figure how quickly we can pay it off. Plus 19000, and then let's just go ahead and do this. And it took us 1, 2, 3, 4 months to pay off 19,000. Crazy. Okay. So again, this is what we call the chunking method. And basically, even though you're dealing with a low interest rate loan, moving it to higher interest rate line of credit, one of the reasons why we do move it is so that we don't segregate our income and we make the debt payoff really easy. And even if we move it to a higher interest rate line of credit, it's not going to be that big of a deal. Okay. Now, the alternative is making direct extra payments. And the biggest issue with that is that nobody does that. That's the default option. Now, think about rationally why nobody would put, and in this case, how much would it be? Scroll up. Their $5,345 in cash directly into a loan just because they know when they put that in and they need it back, then they know they'll never get it back. Whereas if we move it to the line of credit is kind of like a bridge. It makes control of your money so easy while paying it off at the same time. So that's one reason why you may want to do it. And if not, and if you paid off a mortgage like me in 2 years and 9 months, go for it. Make extra direct payments. It's not a contest, okay? So, if you wanna see how long it takes for us to pay off this, loan, luckily, we have a velocity banking calculator here. Let me go ahead and open it up. Okay, so we have this velocity banking calculator where if we just type in the details, we get a number of how long it takes us to pay off the mortgage. Is that cool? And just a quick plug, this is from Renatus, where I originally learned Velocity Banking from. So if you want to up your real estate investing and financial literacy game, go ahead and click the Google form link below. Full disclosure, I make money off of any sale of the product and you give me money. And I know that bothers a lot of people because in this country, um, if we know the person who's making money off of us, like we get really disturbed. But if it's a faceless entity like Amazon or Best Buy or whoever, right? Home Depot, we feel comfortable with that. And then people complain, well, why are the big corporations taking over society? Because you give them their money. Okay. All right. So let's go ahead and do this and just type in the deets slash details. So 300,000. Actually, let me erase all of this. And this will be so quick because we have so much cash flow. So what's the payment amount? 1264.81. 300,000 is the current balance and the original balance. And the current balance is 281,194.31. And then what's our monthly income? The monthly income is 8610.65. So let's just do that. 8610.65. And then our expenses are everything except for the loan we're trying to pay off. So we're trying to pay off this loan. So it's just $2,000 expenses. Could we up it up to 3,000, live a little? We probably could. All right. And then the chunk amount is just how much we're moving into line of credit. Okay. So let's just do 9,000. And then wablam, 3.9 years. That was paid off relatively quickly. right? Relatively quickly. Now, here's the thing, even if you use a 30% credit card, and I'm not saying you should do this, but let's say your credit card's your only option. And again, I would never recommend this. 30, look at that. Still same payoff and 23 grand of interest. And this actually saves more than a first lien HELOC. So if I do a first lien HELOC replacement, which the internet promotes, look at that, 52 grand. Oh, I'm not going to do that in 4.3 years. No thanks. I would rather pay 17 grand and 3.9 years at 8%, or I might even do a 30% credit card than a first lien HELOC at 8%. No, thank you. All right. So, okay. Yes, no, this is zero. And then how many months was it? So it's 35 plus 3.6. I have a bad memory. 3.9 years. 35 divided by 12 plus 3.9. So 6.8 years debt free. Debt free. Okay? 6.8 years debt free. My goodness. Folks, I've done this so many times that this is like, I'm going to tell you something crazy. Sometimes I watch other people's velocity banking channels and they talk about mortgage payoff in like 10 to 15 years. And I'm like, no, something's wrong. Something's wrong. Like every demonstration I've done where the income is rationally proportional to the debt, I've always had it paid off in about 7 years, all the debt. And so it's crazy. It's really crazy whenever I see like a debt payoff, or I'm sorry, not just a debt payoff, a mortgage payoff of 10 to 15 years. I'm like, something's wrong, right? Because every time I've done these demos, unless again, I don't know what I'm talking about. And that's very likely because this is just an excuse to create a carpet cleaning cult. Um, okay, so every time I've done these demonstrations, I've always seen like 4 to 5 year mortgage payoff, right? Like 4 to 5 years, not 10 to 15. That would be insane. That's like a bad day at the office, right? Like, I don't know what you're talking about. But again, because most people don't know how to do the math, manage their finances, it's like crazy. And here's a crazy thing, too. Even if you screw up, right? And I'm not saying you should. 15 years isn't that bad. All I'm saying is that every time I've done this, I've never really passed the 10-year mark when it comes to debt payoff. And we're starting off in a desperate position when it comes to debt. Okay. All right. Well, that's it for today. So this is Korean Atlanta mentorship. Yeah, I don't even know like what's the deal here. What's so special? I've done this a million times, and I know some of you are shocked. In fact, even still these days, I get a lot of watch time, but a lot of people, I get comments here and there, but and I know, I formed my little tribe, right? And that's really what the whole point of this YouTube channel is. But I know people who aren't part of the tribe, they're just staring and staring and staring, and they can't even believe it, right? They're like, I can't believe it's not butter type of deal. And what's sick is that it's actually not butter, it's margarine, which is disgusting for you. Now, random comment aside, yes, this is a Korean Atlanta mentorship. So here's the thing, I give away this velocity banking stuff as a demo for free. But if you're interested in upping up your real estate investing game and financial literacy, because I got a whole lot of stuff that I can cover in my super secret group, cult, whatever it is. And what do I mean by that? Like buying homes at a discount. Remember when 2022 was the peak of the market and people were like overpaying for homes? I underpaid for $100,000. And to be honest, in my worldview, this is kind of average. You know what I mean? Like I don't feel that proud because I hear people like, you know, severely underpaying, and that's what you got to do as like a real estate investor. So we kind of go over that. But if you're not interested, I totally get it because you know most people want to overpay and they don't want to do what I talk about. You know what I mean? All right. Well, that's it for today. It's Korean Atlanta Mentorship. Have a great day, and let's see if we can crank out a few more videos before the day ends.